right now. All right, cool. Saleh, you can start removing people now. Anyone who's got a camera off from this point onwards, and the other moderators that are here, you can just start removing, guys, yeah? Let me share my screen quickly. Here we are. Okay. It's been a very, very interesting week for gold, okay? It's been a very interesting week for gold. It's currently host reclaim. It says reclaiming host may disrupt breakout rooms. Stay co-host. Yeah, stay co-host. Okay, cool. Closed caption. Let me just make sure no one can annotate on the screen. Okay, cool.
That's automatically off, don't worry.
It's off, yeah? All right.
Yeah, that's what.
Let me just remove this from my. Okay, cool. Let's get started. I missed this. I can't lie. It's been 2 weeks. I've been out of game. Okay. It's been a very, very, very interesting few weeks for gold. I was waiting for the zone for a minute. Okay, I was waiting for the zone for a minute. Okay, and as you guys know, if you watch the previous Zoom calls, I was there was a period where it was unclear for gold. Then I said, you know what, I'm bearish on gold simply because price broke below this level long term. Okay, price broke below this level long term, and then price changed character. You might as well join the Zoom in it, because it'll be difficult for you to see from here. Yeah. So price broke below this level, relatively equal lows on a weekly time frame as well, so you can understand how much of a confluence this could be for us. So once price changes character to the downside on a weekly time frame, we're in for a ride. Basically, we're in for an absolute ride. And already last week, what can you see? News obviously pushed this, and as we know as SMC traders, news is just an excuse for price to reach the points that it's meant to reach. Okay, so boom, from here to here, you can see about 1,000 pips almost. Yeah, gold has done. So I actually had an imbalance marked out here on the lower time frame, which I'll get to later. But there was an imbalance between here to here. So what happened was price missed my imbalance by like 10 pips or so. Then it melted down. I've been waiting for that move the whole time. I had my alert there. I just deleted my alert earlier. But what we can see is price tapped into a supply zone. Okay, price tapped into a weekly level supply and it reacted instantly off of there. Why did I draw it from that wick and not the bullish wick? Because we're on a higher time frame and we understand once we drop, if we drop, let's say for example to the daily, or even lower than that, what can we see? That was now a level of supply right there. So whenever you see a level of supply that doesn't, where there's no wick on the bullish candle on a weekly time frame, usually if you scale in, you'll find the correct supply zone straight away. Okay. So what happened was price tapped into this level of imbalance from here to here. And this is what I was waiting for a very, 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 very long time. However, I didn't mark it out on the daily time frame, which was my mistake. Okay. I had my alert exactly at this level over here. I think it was let me go to the 4 hour. Let me go to the 4 hour. The 4 hour. Anyways, the mistake was on my end. I basically missed the imbalance by a little bit. And I think I put it up literally, it was literally right there. And I think it tapped in. So imagine I had an alert right here. And the alert was even called sell gold, I think, or something like that. Or it's monitor gold, sorry. So it was literally right here. And price missed it by this amount. What's the Zoom name? Actually, no, it's calm. Don't join. Just bring your chair around here. No, don't see you. Bring your chair around. And price literally just missed it. Price missed it by that amount. It happens in trading. We don't get stressed. Why don't we get stressed? Because we understand that we've got the skill and we can make money whenever we want in the market. Not as in like I'm saying to myself, oh, I'm going to make 10K today. No, I don't mean like that. I mean, like once you focus on the skill and you have the skill, you can make money in the market. Okay. So enough of dwelling on missed trades. Let's actually get into what's happened in the markets and take a look. So as we mentioned previously, price tapped into a weekly level of supply, which is why we got this bearish reaction. So in my mind now, why am I bearish on gold for now? Why am I bearish on gold for now? Overall, I'm bullish on gold. and I believe it will break the 2020. You know, when price melted in when price went up in 2020, I believe it will break these highs. Why? Relatively equal highs over here. We understand support resistance traders are taught to draw their zones from wick to body, then extend. So this entire level, stop losses lie above here. So I'm waiting for this to now get swept. However, it's not going to happen right away. Why? Because it's on a weekly time frame, and it's a time frame that requires patience. Okay, but we mark it out there anyway. We understand that this is a level of liquidity. So we mark that out for long-term purposes. Short-term, when I say short-term, as we're on a weekly time frame, short-term as in for the next few weeks, I believe gold will be bearish, in my opinion. Okay, of course, on other time frames, we're going to have bullish moves to the upside, but overall, the overall picture, I believe it will be bearish. Why do I believe it will be bearish? Why do I believe it will be bearish? Simply because price change character right here, okay, and also formed equal lows. Price change character right here formed equal lows. So as you can see over here, this broke below those levels. This was the last higher low in the uptrend of gold. Remember, up, down, up, down, up, down. Higher highs, higher lows. Higher highs, higher lows. This high is higher than that high. That low is higher than that high. That low is higher than that low. If you go back on the previous Zoom calls, you should understand this by now. If you don't understand this by now, that means you haven't watched the previous Zoom calls in the group sessions in the Discord. So please pay attention to that. So over here, price broke below these lows. So why am I now bearish on gold? Simply because there's a change of character, there's a change of behavior that is taking place in the gold market right now. And what do we understand whenever they change the character? Price needs to come back, fulfill a supply or a demand zone. Because we are bearish right now, price has fulfilled a level of supply and it reacted off of there instantly. Now, this level of supply, what is it acting as? It is acting as the first. It is acting as the first lower high in the trend that's about to begin. So what do I mean by that? Let's circle this out. This was the highest point. Okay. Price came down, came back up. This was the second highest point. Okay. Price came down, changed character on a higher time frame, came back up, and this was the third highest point. So this high is lower than that high. That high is lower than that high. And now we understand with the way the market moves, once the market breaks, okay, we call it change of character. When it wants to change the character, it pulls back, takes out liquidity points, for example, like this liquidity point right here, because we understand whenever there's a change in trend, old higher highs or higher lows or lower highs or lower lows of the previous trend are now liquidity points. Write that down. Make sure you write that down. It's very, very important. So here, that was liquidity that got swept, got taken. Here, that was liquidity that got taken. So now that this has been swept and this has been swept and this POI was tapped into, we now have enough liquidity in the market for the market to move in the new trend direction. However, we are still going to be monitoring this area right here, this wick. Why? Because like we said, we're on a weekly time frame. That wick is actually a story that's going on the lower time frames, which we're going to get to later on. We don't want to make our charts too messy, so we're going to delete these circles now because you guys get the point, and you can rewatch it anyway, but we're going to keep the charts very, very clean for now. So old liquidity got taken, and now we are waiting for the next move to the downside. So if I said to you the old trend was an uptrend, up, down, up, down, up, down, up, down, up, down, up, change of character, there are buyers here. So now you've got equal lows in the form of a triple equal lows right here. So what are we going to do? We are going to absolutely target this as liquidity. We are going to absolutely target this as liquidity. We are going to target this as liquidity in the form of what? Look how many confluences of failed demand that could take place right here. Okay, we can label this as wait for demand to fail, because we can see that very, very clear as day. Okay, why are we going to wait for that demand to fail? Who can think to themselves? Let me give you guys 5 seconds to think. What can you see? For the advanced students, you should already know the answer by now, because there is a level of demand right here. You might say, oh, but it's mitigated. You're absolutely correct. But when we drop to the lower time frames, what do we learn? We're going to get to it later on. We're going to keep this level right now. So now, because price has taken this liquidity, it's now formed the newest lower high. What are we expecting? We are expecting this liquidity point to get taken out. It's a triple, they call it triple bottom. And this is an actual pattern that retail traders follow. Retail traders call this a triple bottom. So in retail traders' minds, whenever they see equal highs, like in the form of 2 equal highs, they call that a double top. So they sell, retail traders sell from double tops. Double tops, equal highs flipped, we call it equal lows. Retail traders call this double bottoms. They buy at double bottoms. So similar to this, imagine you've got 3 equal highs. They call this triple tops. And the opposite scenario is what? If it's at the bottom, they call it triple bottoms. So in this situation here, what can we see? We can see liquidity. In this situation, what can we see? We can see liquidity in the form of a triple bottom. So we got buyers, 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 which means what? Stop losses, stop losses, stop losses. So this is another reason for us to be bearish on this. And we understand that once price taps into supply zones like this, if it's the correct zone, it will melt and take out, well, this is not financial advice, but I believe that gold will melt to take out liquidity points eventually, not straight away, because it's a weekly time frame, eventually. So it has to go down, go back up, take out new liquidity points, go down, go back up. But eventually, I see this as a potential target for gold. So let's drop in time frames now. So now we've got all of this confluence. And now remember, I told you guys, I'm going to mark out this wick. I'm mark out this wick above. It's not important right now, but as soon as we drop time frames, we can see how we can incorporate this into our analysis. Okay, I haven't done with the monthly time frame because you guys know already we've done a monthly analysis 2 weeks back. We don't need to do that again. Okay, so we can see nothing on the 3-day time frame in terms of this wick. That's all we're focused on right now, this wick. Why? Because we want to know if this now turns into new liquidity and that gets swept, we can now look for sales from this. Is called a premium zone, a discounted zone. Okay, a discounted area. You're buying cheap, you're selling cheap. Okay, you're entering at cheap prices. That's what you want. You don't want to enter where 95% of traders are entering from. Why? Because it's too predictable. You want to enter from the best cheap. That's why I say when you treat trading like it's your business and you're trying to buy cheap, okay, that's when you see results. If I'm now starting a company where, I don't know, I'm selling bottles of Pepsi, okay, Pepsi cans. If I can get it from a wholesaler for, I don't know, let's say 35p per pop, for example, I'm not going to go to another wholesaler and sell it to me for 45p. Why? Because the 35p one is cheaper and I can have a larger profit margin on that. Okay. Similar to this, why are you going to enter from zones that are a bit more expensive? Enter from cheaper zones. So now on the daily time frame, there's nothing. Remember this first box here, that was the wick on the weekly time frame. So now we're starting to get a little bit of a story. So what I'm looking for is if I get stopped out of this position here, I'm not going to enter straight away. But if price distributes within the zone, gives me a change of character, then I enter after Wyckoff being formed, obviously distribution, and I enter. If it decides to form one last UTAD within this zone, basically I'm looking for a UTAD within this zone. If the first zone doesn't hold, does that make sense? So I'm now going to drop to the 15-hour time frame. I'm going to drop to the 15-hour time frame. Let me drop even more. 12 hours. So right now, I'm ignoring the prior analysis. I'm just focused on this blue level here, this blue box, because I want to find out, is there anything that could potentially stop me out of my first entry if I decide to enter from the first zone? Oh, what can I see? I can see a level of imbalance from here to here. However, this could also be a level of supply. So I'm still going to keep dropping. I'm not satisfied with this 11-hour level of imbalance because there could be a supply level that I missed out on. The same way I missed the weekly level of supply on gold because I was focusing on it, an imbalance. To be honest, that was my fault because I marked the imbalance incorrectly. I think I was rushing when I was doing it. I think I had something to do, so my finger might have slipped, or I just marked it out incorrectly. So is this a bullish candle or a bearish candle? That is a bearish candle. But what we can do is we can mark this out and expect there to be a bullish candle. Expect this bearish candle to be a bullish candle when we drop in time frames. So now on an 9-hour time frame, let's drop to the 8-hour time frame. Is there anything relatively significant that we can see on the 8-hour? No, we're still looking for that bullish candle. Still looking for that bullish candle. Can we see anything bullish? Absolutely, right here, we've got it. And what else can we see? You can see an Asian high right here, this little dash, once we drop in time frames, okay? However, so that's why now what we want to do is we want to mark it out from this wick. Whenever you see a big wick that looks like it doesn't make sense, always scale in, because you'll find something within that. So now that I've seen this Asian high here, what I can do is I can mark out the wick from the top. So, and this is one thing that I want to make clear. Sometimes people see Asian highs or Asian lows everywhere and they get scared. Oh yeah, I'm not entering there because that's an Asian high or Asian low. Amazing. It's good to have that mindset, but you have to be wary and you have to think, okay, cool. If that's an Asian high there, let me mark out the entire zone and wait for price to distribute or accumulate, depending on where we are in the market. Seeing an Asian high or Asian seeing an Asian high or an Asian low doesn't mean, I see some people, yeah? Seeing an Asian high or an Asian low doesn't mean stay away. It means stay away, sorry. It means stay away. But in this scenario here, it means wait, just wait. Like, why sometimes you're in a mad rush? People just want to have trigger fingers and buy or sell straight away. Relax, calm down. The entire part of our strategy is to wait for price to show you its hands. Just wait. Because if you believe in distribution or accumulation, what do you believe in next? A change of character. What does a change of character leave behind? A supply or demand zone that will be respected if you drew it out correctly. So why are you stressing? Asian high, Asian low. The distribution, the Wyckoff schematic is going to take out the Asian high and the Asian low. Just wait. Just wait. And if it doesn't, you just missed an opportunity. You didn't miss an opportunity, because it's just more liquidity being built up for the real moves to take place. Then it's going to take out all that fake trade, and it's going to take out the Asian high, Asian low. Then it will move in the direction you've been waiting for. Does that make sense? So whenever you see, for example, here, people are going to be like, oh yeah, but I'm not selling from there because there's an Asian high. You're forgetting it's a 7-hour time frame, bro. It's a 7-hour time frame. You see, it's a 7-hour time frame. Just wait for price to distribute on the lower time frames. Wait for price to distribute and wait for price to show you its hands. So now this wick here, is there anything within this wick that we can see that can possibly be a reason for us to refine? Let's scale to the 6-hour time frame. Let's go. What's the 6 hours saying? What can we see? What can we see? Same thing again, but the order blocks becoming more and more and more clearer. 5-hour time frame. Let's go. Hopefully, let's make all this. Yeah. Okay, we're getting somewhere. We're getting somewhere. 4-hour time frame. Let's go. And if it's a news event that caused this, then it's not a problem. We don't consider it. Okay. Okay. Nothing as of yet. 3-hour time frame. What can we see? Nothing as of yet. 2-hour time frame. What can we see? Nothing as of yet. 1-hour time frame. What can we see? Oh, lovely. 1-hour level of supply. 1 hour level of supply. And where's the Asian high? Where is the Asian high? The Asian high is right here. So in this scenario, this is what I'm doing. So this is what I wanted to show you guys once you guys, finish the course and get advanced with it. And I mentioned this on previous Zoom calls as well, about order block fills. Sometimes when price taps in, that doesn't mean the order block is fully mitigated. Price can tap into 50%, 78%, or the entire order block. Does that make sense? So over here, we can see the Asian high is at 50% of the order block. So what am I going to do? Am I going to still mark out this entire zone? No, I'm going to mark out 50% of it. And I'm going to wait to see if I can find anything above this Asian high. Because what can happen is price can come up, pinch the Asian high, and continue, because this order block can still be valid. It can still be valid. So now let me drop to the 45 minute. Can I find anything above that Asian high? Is there any other refined zone within that area? No, on the 45-minute. And if there isn't, no problem. You just consider it. You just keep it in mind. So right now, remember, we're looking for a confluence. We are looking for a confluence to support if we're going to enter from that first zone that we mentioned previously, or if we're going to wait to see if this Asian high is going to get taken. So 30 minutes is looking good so far. I'm not going to lie, it's looking good so far. 29 minutes, let's see what 29 minutes is saying. And many times when I first started trading SMC, I'll find myself in this situation. I'll mark out a zone, it will fulfill the order block, and then later on, it will come back to fill in more of the order block, which is why I don't like to move my stop loss. I stopped moving my stop loss like a few months back, maybe like 8 months ago, because Mark Douglas mentioned something. He said, if you can't accept the risk, then you truly haven't accepted the reality of trading. If you, and I saw a few people mention this as well when they were posting their trades for the challenge. Oh, I just closed out because I was going to prayer, to Juma, or I closed out because I had uni. If you really risked correctly, you will not be stressed about holding a trade. The only reason stress comes from entering a position, or when you're holding a position, you're in a trade, is because you know you have over risked. If I've got £100 in my bank account and I risk £1, am I gonna go about my entire day thinking, damn, I've got £1 at stake. If it goes left, then I've lost £1? No, it's not gonna, I'm still gonna be able to sleep at night. Why? Because it's only £1. It's 1% of my capital. Similar to trading. If you have only risked 1% of your capital, why are you stressing and not letting your trade hit take profit? Why are you moving your stop loss too early? You see? So always keep your stop loss above the order block, because price can come back, fill in 50% and continue in the same direction. Then you're stressed. Now you're trying to find a dead entry. You're trying to find an entry that doesn't make sense, simply because the true reason why you're re-entering is because you're angry and you're upset that you missed out on that move that you used to be in. So now you're making fake confluences in your mind to make your ego feel better as to why you missed out the trade, and you're trying to justify it with saying, oh yeah, I can see equal highs, equal lows. Yeah, but this liquidity point hasn't been taken, when in reality, you know you're just lying to yourself. Let's keep it very real here. Okay, 28-minute, what's going on? Let's see what's going on the 28-minute time frame. Here we are. Is it actually loading, or is it going on? Okay, 28-minute. Lovely stuff. What can we see? What can we see on the 28-minute time frame? What can we see? So overall, this is the order block, right? From what we had drawn before, it was this zone here. It hasn't even filled 50% of it yet. So now I believe we can find something here. 27-minute. Let's look at the 27-minute. This is a bit jarring now. I'm just having to scroll back. 27-minute. Let's take a look at what it's doing. Nothing there. 26. To be fair, I could just drop to the 15, because what I'm looking for, I don't think I'm going to find it on this time frame, because the wick is up. The wicks are a bit too big. Yeah, we're getting somewhere. Let me check 15-minute. We might have something potentially. We have something here. Right, they're not loading up. This web page is using significant energy. Damn right, that's what it's meant. What meant for me. Is it not going back? Let's try playing that. Okay. Lovely. This is exactly what we were waiting for. Actually, no. It still makes sense, to be honest. Okay, is it loaded up though? Let's see if it lets me do 15 minute again. The order block is there. We've already got the order block marked up. I'm just trying to see, is there anything else? This is jarring, man. 19 minutes. $17 minutes, let's check. So look, I don't think it will let me scale down even more. But the point is, this is the entire order block here. This is the entire order block. 50% of the order block is here. Okay? 50% of the order block is here. Did price come and fill 50% of the order block? No. So this order block is valid unless we get a break above. This order block is valid for bearish sells unless we get a break above. Okay? This is not financial advice, it's just what I believe. So this is why I say now we can push it up until here. We can push it up until here. Usually, if you were in this trade already, you should still be in this trade. As in, you're not going to be in this trade until now unless you're a position trader. But the point I'm trying to make is whenever you enter from the mitigation of the order block, I always say enter from the tap. Always enter from the tap. Don't try and move fancy from the 50%. Just enter from the tap, man. Enter from the tap. Put your stop loss slightly above and have your targets, for example, wherever they may be. If price comes back, okay, if price comes back to fill in 50%, you're still in the trade because you haven't moved your stop loss. You're still in the trade, okay? The only time you move your stop loss to break even or whatever the case may be is if there's a news event, okay, and et cetera, but we don't trade news events. If you're in the trade from before, no problem. But like I said, it always comes down to what you're risking. If you know you're risking the correct amount and you're moving sensible with your risk, then you shouldn't even move your stop loss, to be honest, because you already made the decision. You have to commit to your decision when you enter it. So this is for the people that I'm saying, if you've missed the trade now and the trade is coming back and you see a 50% order block that hasn't been filled, you can enter again. You can enter again. If you've missed the initial tap, if you missed the initial mitigation on the tap, you can wait if it hasn't filled 50%. If it's already filled 50% and it's come back to fill 50% again, don't enter because that's already mitigated and you're being greedy. You know why you're entering, basically, okay? That's the point I'm trying to make. So now, instead of using this trend line tool, I'm using my horizontal ray. Yeah, boom, there's 50%, okay? So now, let's go back on the higher time frame and this will make sense. So I'll mark this out as Asian high. Let's go on the 4 hour now. Let's go to the 4 hour. So now, do you see how we've developed this confluence of saying, there's an Asian high here, a very, very, very small refined zone over here that price could melt from if it decides to disrespect these levels here. So if price breaks above here, it can tap into that zone and melt from there, okay? And remember I said, you always want to be a scenario type of trader. What else can we see over here? What else can we see? We can see an imbalance right here from this wick to this wick, drag it out to the right. So what can also happen is, if I delete the zone now, temporarily, what can also happen is price can come, fill in the zone before dropping off. But you have to deal with what you got now, okay? And what we have now, so let me delete that. We have to deal with what we have at hand right now and the most recent data. Did I mark that out already? So here. We have to deal with what we have at hand. And what we have at hand is the following. Let me go back on that to 10 hour time frame with a daily. Right, I'm on the imbalance. Yeah. Go to the split. Okay. So you guys can see how SMC clearly, beautifully works. Tapped into an imbalance, literally melted straight away from there. For how many pips? 900 pips, probably a bit more. 950 pips, basically. Okay, so now what can we wait for? What can we see? If this zone is now valid, okay, which is showing us signs of validity. Why? Is that a word, validity? Validation, validity. I'm not sure. I got kicked out of college twice, guys. So over here, this is now a change of character. This is now a change of character. What can we see? Price change of character. What has price left behind? A supply zone and an imbalance. So boom, from here to here. Remember, we are scenario traders. I'm not going to say, oh man, there's an imbalance though. What should I trade from? Imbalance or supply zone? Oh, let me trade from both. No. Wait for price to tap into the imbalance. Wait for it to distribute on a lower time frame. Wait for it to form another change of character on a lower time frame. Leave behind a supply zone, then you sell from there. If this zone is valid. If it's not valid and it forms one last U-turn to the upside, what you can do is you can trade from this level here. This is not financial advice. This is just a zone that I would trade from. I've got to say that now because, you know, Yarimi University is global. Over here, one more verdict. So here, got a touch here. It can touch here and potentially melt. So now, for whatever the scenario may be, what take profit zones am I looking at? I'm purging right now. I can see all of this trend line liquidity over here getting formed. Okay, trend line, TL liquidity. Okay, boom, boom. See that right there? This level here, I see all of these levels getting swept in the future later on. More and more and more trend line liquidity. As you can see, it just builds up. You can see perfectly. Yeah. We've got the triple bottom that we spoke about there, and we've got the higher time frame. Remember this blue box? It was the demand that said it was going to fail later on, early on. So that was the failed demand. Okay. If I go to the weekly time frame, I think it was the weekly that was on, or was it the daily? Yes, weekly time frame. Wait for demand to fail. The triple bottom liquidity. Remember that, the equal lows. That's what I spoke about. Price tap into that demand zone now. So that is an area you can target. And you can also see what this is an area of supply, a large area of weekly supply. It's a higher time frame, so the precedence is crazy. High time frames always take precedence. Remember that. So now we can delete that. We're considering it. We understand. Okay, cool. Price can pull back into these zones, which lines up with the level of our imbalance. It lines up with a level of imbalance. And look how much high above our imbalance is up here. So compared to if I was to draw out the weekly supply level again, look where our imbalance is. Remember this rectangle right here? This was the imbalance that we drew on the lower time frames. So this is coming into a very, very cheap zone for you to sell from, for example, if this trend was valid there. So here we can delete the zone now. We can delete, and the reason why I say if, etc., guys, is because I don't give financial advice. A lot of traders, when they come and they give signals, they get done dirty basically by a financial conduct authority for giving signals, which is why Yarimi University will never give signals. We will never tell you what to do with your money. We'll never give you investment advice. Whatever you do is down to your own accord. We simply come on here and share the ideas that we have, that we believe will take place in the markets. Everyone's down to their own, it's down to your own due diligence to look at the market and do as you wish. We are simply people that come on here and describe and explain what we believe will happen in the market for our own trades, not anybody's trades, and we are not liable for anybody's trades or any losses. Thank you very much. Protocols, have to do them. Sorry, guys. Legit lifestyle. We'll change it. So anyways, over here, we're waiting for price to sweep this and tap in. Remember what we said earlier, though. Remember what we said earlier. Earlier, we said we marked out this demand zone, and people might say, oh, but this area is mitigated. So the same way we was very, very analytical with the zones above here before we pick out what we're going to do. And if look what we've done. What we've done is so special. We said, okay, we understand this is a high time frame weekly supply. We understand this could be the start of a new bearish trend. However, this is how we are different to other traders. Other traders marry their analysis. They say, no, man, this has to happen. This has to hit TP, or this has to react from here. Watch, gold is going to do this. Then when it doesn't do this, they look like idiots. We are adaptive traders. We say, okay, cool. If this happens, then this will happen. However, if this doesn't hold and this happens, then we understand that this could happen. We have story A and story B and story C. We wait for price to show us his hands to understand which story is valid. Does that make sense? So over here now, what do we speak about? Order block mitigations. Right now it's tapped in. What do we know about order block mitigations? 50%, 78%, or the full shebang. So over here now, we want to see if we can refine this demand zone even more. Why? Because now we're looking for TP levels, overall TP levels, and you can find your own trades throughout this, okay? So boom, first we refine. What we can see, demand zone over here. This is now liquidity, for example. Okay, that line right here. This is what I mean here. Okay, because that gap to that gap, that gap to that gap is now an imbalance. So this gap to this gap here. Okay, this is what I mean. This gap to this gap here, an imbalance. However, because of the precedence of the overall higher time frame, we understand how this imbalance could get taken because there's a hugely large demand zone right there. So now we drop to the daily time frame. Drop to the daily time frame. What do we see? Can we refine even more? Potentially, but there's nothing as of yet. Let's go to the 15-hour time frame. What can we see? Is there anything we can refine? Okay, amazing. What can we see? Level of demand right there. So now all we need to do, because it's a high time frame, we don't need to scale in even more. We can just use this as a TP level. So now we drop back on a 4-hour, for instance. Drop back on a 4-hour. And now I've got all my confluences, okay? If price breaks my level above and it doesn't follow my analysis, I understand, okay, cool. There's more areas price needs to sweep, like we mentioned earlier, then the trade can take place. However, there's too much trendline liquidity right here. So now if price pulls back, taps into our imbalance, distributes, you can sell, I can sell, for example, yeah? I can sell from a level like this if price shows me what I look for, and I can target this level all the way down here as a TP level, 1 to 34. Expecting the demand to fail, expecting trendline liquidity to get taken out, expecting the equal lows to get taken out here. So these are all your confluences, and you should write them down. Number 1, okay. Number 2, number 3. Write down all your confluences, for this trade. Because what will happen if you don't write down your confluences, like I always mention, is you're going to be mid-trade, you're going to see pullbacks, think, oh, is my trade still valid? Bro, the market has to follow these patterns. It's in the course. What do I say? The market can either trend, retrace, or consolidate. If it's trending, if you got a car and you fill up full tank, and you're driving for 24 hours, or I don't know, whatever car you may have, you're driving for a week or 4 days, and you've run out of petrol, what's going to happen? What's going to happen? You've got to drive back to the petrol station, fill up before you can move again. This is like the markets. The markets get exhausted, guys. It can't just move in one direction all the time. If price drops and it's over-exhausted, it's got to make a pullback, a slight correction, before it's got enough liquidity, aka petrol, that's the example I'm giving, to carry on moving to its final destination. Once it's moving and it's taking more trendline liquidity, for example, it can potentially come back up, fill up again, take liquidity, and drop again. So that's why I say old liquidity, so new liquidity, old valid zones turn into new liquidity later on. You see, so now up, down, and you can hold this throughout. But if you're a day trader, you can wait for more confluences to enter on different days. So price comes down, hits a liquidity point, take profit, no problem. Come back the next day or day after, whenever it retraces into an imbalance or another supply zone, you can sell again from there if you wish to, and you've done your research, for example. Okay, then what you can do is you can wait and have that as a long-term TP area. This is your long-term TP area. So if you see valid sell setups, I'm gonna sell if I see valid sell setups up until that zone. If I don't see valid sell setups and this area gets broken, I'm still gonna wait for price to show me its hands. Very, 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 very simple. Okay. And I'm only going to be doing gold this week because that's all I can see that's valid. Every other pair that I trade is in very choppy areas, like US 30, for example, here is in a very, very, very choppy area. So let me stop sharing my screen, and I want to take a look at your beautiful faces and answer any questions that you guys may have. So Saleh, if you can manage this, please. If anyone's got any questions, so they don't talk over each other. Furthermore, if someone if you have a question, just put your hand up and I'll unmute you. But there's 4 pages though, I can't see everyone.
Yeah, that's the best way to do it. I'll see as well. And usually the ones that put their hands up, they come to the top. So
okay, yeah, use the hands up emoji, guys. Yeah, and sorry, you just unmute whoever wants to ask a question.
Yeah, sure.
So people don't think there's any favoritism here.
Shalom, bro. You good?
Wa alaikum salam. My bro Ali, how are you, bro?
Good, bro. I'm good. I just had one question. Yeah. So I got the same analysis for gold, but I was thinking I wanted to buy up to that zone. Would you recommend that buy that zone?
this is not financial advice, but if you trade what you see, if you see all of your confluences getting met, there is no reason for you to not enter the trade. There's a difference between pulling the trigger and over pulling the trigger. If you've got a long-term goal in mind, don't focus on short-term profits. Just be patient, because 95% of the traders who lose money are those who have bad psychology, those who are trying to get rich quick, and those who can't wait for the POI. I mentioned this like a few Zoom calls back. You can wait 30 days for a paycheck from your job, but you can't wait 2-3 days for your POI to get hit. Why is that?
No, I hear that, bro.
You see, don't focus on counter trend trading. Don't do that. If it's valid and the time frame is significant enough and you gain all your confluences, don't be scared. Enter the trade only if it's valid. But don't say to yourself, don't let the root psychological problem of that be, oh, it's because I can't wait for this overall zone to get hit. That's why I'm going to buy it back up or sell it back down until it gets to my overall zone. Go live your life. That's what trading is meant to be, bro. Trading is meant to make you live freely. Go and trade with you, set your alerts. Once your alerts are hit, then by all means, go take a look at the market and see what you can see and enter. Do you get it, bro? And remember, like, you're married to one pair. If one pair, I'm sorry, guys, that's a good example, but if you got 4 wives and one of them is, you got another 3 to look at. I'm sorry, guys. I'm sorry. I'm sorry. I'm sorry. I wish I could give the same example for you guys, but you guys can't have 4 husbands. But you get what I'm trying to say? If one pair is moving mad with you, look at other pairs, man. The market is plenty of fish in the sea, especially in Bangladesh.
Let's say no more, bro.
Our Bengali brothers, man. Yeah?
Say no more, bro. Thank you.
Bro, man, no problem. Any other questions, guys? Yeah, Saleh, just deal with unmuting and stuff, yeah? What do you carry, boss? We're in Dubai, guys. Don't worry, it's halal. Even UK.
Alaikum, bro.
Episode coming and everything there. Alaikum salam. Who's that?
It's Jamil.
Yes, Jamil. What's going on, bro? You're right, yeah?
Alhamdulillah, I'm chilling. How are you?
Lovely to meet you, man. My first time seeing you, man.
Yeah, I joined, like, bro, when you posted it, it was 399.
Yeah.
I was like, yeah, calm, jumping on it straight away. But yeah, my question was, you know, when you see an Asian session, at the top of the Asian session, there might be an order block, but the top of that Asian session hasn't been taken out. Would you like highlight that order block, wait for a change of character for entry, or would you kind of allow it to let the Asian session be taken? Because obviously you could be stopped out, because essentially that's a point of liquidity, isn't it?
Yeah. Whenever I have an order block and I see Asian session near it, I don't enter it. I'll wait for the Asian session to get taken.
Calm. All right. Thank you, bro.
Yeah. Yes, guys. Any more questions? Saleh will unmute you. Yeah, just use the raise hand icon, guys. Yeah, I think you can click the button. Sorry, if you can tell them how to do it. Hey, guys, sorry, there's a few people. There's like 4 or 5 people with their hands raised.
Yeah, no. What I'm doing is I'm clicking ask to unmute, and at that point they can actually start speaking. But some of them are not doing anything. So, Hassan Hussein will allow you to speak.
Assalamu alaikum, bro.
Alexander, how are you, man?
Alhamdulillah, man. Good. How are you?
Yes, amazing, my guy. Lovely to see you, man.
Yeah.
Where you from, bro? Man?
Yeah. Anyway. Huh?
Let me see your face. Let me guess where you're from.
Yeah, bro.
Pakistan. Innit?
Oh, wait. He accidentally unmuted himself. Okay.
Yeah. Yeah, bro. Anyways, I had a question about higher time frame POIs, because basically, like, I see price tap into it, like, and then it gives me the change of character, it gives me a breaker structure, it leaves clean OBs, but then I just see it like race through it. So I was wondering, what do you think my problem is there?
Higher time frame. You're probably ignoring a higher time frame, which is why I have the 15-hour, 14-hour, 13-hour, 12-hour. Price won't do anything for no reason unless it's taking liquidity.
Yeah, and I had a little quick other one. You know your order block. Would you like wait for liquidity to build near it as a confluence?
Yeah, absolutely. And I mentioned it, and I've got this in the previous Zoom calls as well. That's why I say if you watch all the group sessions, you come across a lot of gems, because some gems stem from people's questions. Like I always say, if you see like equal highs and there's a supply level above it, that's such a major confluence as to why you should enter from this, because it will just take that liquidity, tap in, and melt straight away.
Yeah. All right. Thank you, bro.
Go on, bro. No problem. Guys, what are you saying? You not feeling this haircut though? What's going on? I'm fresh head right now.
Assalamu alaikum, habibi.
Alaikum salam, bro. What's going on, Abdullah?
Alhamdulillah. I got a question. You know, when the prices get reversed up to hit the order block, if you buy, does that make you a retail trader?
Say that again.
You see when the price was going up in gold to touch the order block and then reverse down, yeah?
Yep.
If you buy from there, would that make you a retail trader?
No, it wouldn't make you a retail trader. And also, guys, you have to understand that not all retail traders are bad traders, by the way. Every strategy works depending on each person's psychology. You might be a retail trader that trades support and resistance, but you have amazing risk management and you have amazing psychology. And the retail traders, they have like 50 pip stop losses, 100 pip stop losses, 75 pip stop losses. So they basically avoid all the nonsense. But the only thing is, do you have the psychology to see yourself in 50 pip drawdown, 70 pip drawdown, a low risk to reward ratio? It doesn't make sense. But being a retail trader doesn't necessarily mean it's a bad thing. Bro, this is about making money. If you are making money by any means, do your thing. Make your money, man. Trading is not meant to be about, oh, this is about your trading this. Bro, if the guy is living his life and he's doing his thing, trade however you want. Trade backwards if you want. You know what I mean?
No problem.
To answer your question, no, that doesn't make you a retail trader. It doesn't make you a retail trader.
It doesn't?
No.
No problem. Thank you very much.
No problem, bro. A retail trader is someone who just enters from positions that don't make sense, where everybody else is entering from. Predictable zones in the market. Okay? They're entering at expensive areas. They're not looking for cheap prices. They wait for price to make its move and then they enter again once the move is done because they feel like they've missed. You know what I'm trying to say? People that don't really think logically when it comes to trading. They don't treat trading like a business.
Assalamu alaikum. Can you hear me, bro?
Wa alaikum salam. G-Way, what's going on?
Good, man. How are you, man? How's the holiday and stuff?
Alhamdulillah, man. It's been a minute, man. How are you, bro?
It's been a while, man. I'm good. All good, man. Bro, I wanted to ask, this has nothing to do with technical, but I wanted to ask about your plans for when you're back regarding events and any other things that you're
back. First week I'm back, I'm gonna have a live event for you guys. First week I'm back.
Okay, inshallah.
The only reason I don't know when I'm back yet is because I'm just sorting out a few paperwork out here. So as soon as that's done, like some visa stuff, as soon as that's done and I'm back, first week I'm back, straight event, probably even next day that I'm back. So just beware. But you guys will have enough time though to know. So don't worry. We're gonna give you notice. Saleh is the one that's handling that. He's trying to look for venues and stuff. He's sorting that out. And we've got a few lined up already anyway. So we've been working on it. But yeah, as soon as I'm back, it'll be even crazier. Like we're gonna go ham with the one-to-ones as well. It's just that these few
found a good venue. Sorry to interrupt. Found a very good venue. Not gonna lie. Just need to finalize it and then we'll let you guys know.
Cool.
Perfect. Okay, no worries. Appreciate it.
No worries, bro. So yeah, man, with Umrah and everything, then I have to. I'm trying to say, I don't really want to be.
I was due to come. My dad's there now. Literally, he was there when you were there. I was gonna be with him, but obviously, I wasn't able to.
Yeah.
But
yeah.
I hope it was refreshing.
Yeah.
For you.
Wallahi, it was amazing.
That's appreciate it, man. I hope to see you, inshallah, when you're back.
My brother. Yeah, inshallah, one day, man. You never know. Yarimi University, your Umrah trip, man. Why not, man? Make dua on the Kaaba, man. Yeah, it's not haram, so we can make dua. Allah grant us more pips. So, anyone else got a question?
Assalamu alaikum, bro.
Alaikum assalam.
You can hear me? Abd Rashid.
You're looking like you're ready for a YouTube channel, man.
Alhamdulillah. Alhamdulillah. How's the Dubai life?
Abd Rashid,
I met you before. Yeah, we went football together. We went football together.
Look into the camera. Hey, what are you saying for? Let's play tomorrow. I'm playing football tomorrow. You gonna come?
Say no more. We'll see each other. You know, it's crazy. You thought I was Canadian this whole time, you know? Last time when I seen you. Last time when we played football with Abd Rashid and them lot.
There was one Canadian guy there. There was one Canadian guy there. That's why I thought he was with him.
Yeah. Inshallah, show me if If you go football, inshallah, let me know.
Chat to me. What's your question, broski?
So I was gonna say, yeah, do you know when price taps in the high time frame? Like you said, there's an Asian high, obviously, in the, let's say, in that POI, yeah. And you said that you'd refine it maybe to the 17, 15 minute. What about if that 15 minute or 17 minute POI is like, let's say 15 pips, and you don't want to go aggressive? Could you go to like the lower time frame, maybe the 1, 5, 6 minute, maybe find a distribution and enter from that? Or do you just go aggressive from that bit?
Me personally, I like to scale down to the lower time frames only because I like to have the smallest possible stop loss of less than 10 pips. However, you have to understand when it comes to trading, the lower in time frame you drop, the lower your win rate is gonna be. However, we are not win rate traders. Remember that. We are RR traders. Why are we RR traders? Simply because when we look at risk to reward ratio, if you're catching a 1 to 10, and you're making 10% on a trade. You're making 10% on a trade. If you're making 10% on a trade, you can lose the next 9 trades and still be up. Sorry, you can lose the next 3 trades and win the next 7. You can lose 7 trades, win 3 trades, and you can still be up overall. Why? Because you're gonna catch a minimum, what I teach anyway, catch a minimum 1 to 10. You make it 10%, 10%, 10%, 30%, and you've lost 7 trades, you've only lost 7%. So you're up, what, 22% overall.
Okay, inshallah, yeah, no problem.
So if you're happy dropping time frames, you have to understand that if you're considering a 1 minute level or a 5 minute level or a 3 minute level over a 15 minute level, over a 1 hour level, you have to be willing to accept that your win rate might drop. However, this is the biggest psychological challenge. The biggest psychological challenge is for someone to understand you have to literally have affirmations on what trader you are. You have to know who you are. Are you a day trader? Are you a swing trader? Are you a trader that takes partial profits? Are you a trader that trades London session? Are you a trader that trades New York session? Are you a trader that trades both? You just wake up, look at the market and say, hey man, let me see what I can see. And you don't care about the lunchtime hours that we mentioned in the course. You don't care about the volatility of the New York Open. You don't wait for, liquidity to get taken out. And then when the real move takes, you don't wait for these things. You don't consider these things because all you see is dollar signs in your head and you ignore that this is an actual market where you have to enter at cheap prices. So you have to, number one, consider what kind of trader you are, and always remember when you enter a trade, what kind of trader you are. Because having a 15 pip stop loss, there's nothing wrong with it. I just don't recommend it. Why don't I recommend it? Because it lessens your risk to reward ratio, your RR decreases. However, you can trade whatever stop loss you like as long as your risk is no more than 1%. As long as your risk is no more than 1%, and you have to remember your stop loss has to be in a valid place. You have to enter from a place where if your stop loss gets hit, that means the trend is invalid. That's how you know. That's when you become an elite trader. When you know your SL got hit, if your stop loss gets hit, that means it's a violation of the trend and it's about to enter an opposite trend. So you have to put your stop loss in a place where if it gets hit, that means the trend is invalid.
Okay, perfect, perfect.
Say that again for everyone else.
Yeah, perfect.
I see some people looking a bit confused.
Okay, quick question. When are you going football tomorrow?
Let me mention that one more time. So you have to put your stop loss in a place where if stop loss gets hit, that means the trend is invalid. I'm going football tomorrow at 8:45. I already got 7 guys though, so I don't know if it's 7 or 8 aside or 9 aside. Whatever side it is, I'll let you know.
Okay, inshallah, lock you up, man. Don't worry. Next time, yeah. Last time was a misunderstanding. This time, you'll see what's going on.
That's it.
Inshallah. Inshallah. Assalamu alaikum.
That's fine, bro. Yes, guys. Any other questions?
Assalamu alaikum.
Wa alaikum assalam. Who's that speaking? Yes, I recognize you, man, in the barber shop.
Yeah.
You cut your hair?
Yeah, I went on it last week.
Oh, what a legend, man.
Yeah, I had to cut it off.
Shout to you, bro. How are you, man?
And I'm good, alhamdulillah. And I was gonna ask you, let's say you identified Wyckoff on 15 minute, 5 minute, 3 minute, and 1 minute.
Yeah.
but then there's a change of character on the 1 minute and 3 minute, but not on the 5 minute and 15 minute. Would you still, and then it taps into your last put, wait, there's a change of character on the 1 minute and 3 minute, but not on the 5 minute and 15 minute. Would you still enter? Would you still call that like a change of character?
I would recommend don't enter off the 1 minute. Sometimes you can, it's valid. I've done that many times before where, like, guys, you haven't seen, like, back in the days, I literally used to trade with 2 pip stop loss. Like, accuracy is disgusting. I can still do it now, but I just don't. I'm in a position where before, because I was trading I was an estate agent at the same time. I had so much time. I was on my screen all day, so I can afford to get stopped out, enter again, etc., etc. But now I don't want my trade to be like that. I want to enter from a place, know that I'm still in the trade because my stop loss isn't so tiny. I want to enter from a trade and enter a trade from a position and be able to get about my whole day knowing that I'm still in the trade because my stop loss is in a valid place. Does that make sense? So to answer your question, I would say enter from the 3 minute. Or if you're trying to wait for the 5 minute and 15 minute, wait for it. Wait for it, because whatever happens on a low time frame will happen on the high time frame. You have to remember, each time frame has its own tribe. Some people only trade 1 minute. Some people only trade 15 minutes. Some people only trade 1 hour. Whatever these time frames do, the other time frame will do it in its own way.
Okay. Yeah, thank you. Inshallah, I'm in Dubai as well, so inshallah, let's link up.
You're in Dubai, yeah?
Yeah, I live here, yeah.
Okay, drop me a message, come to the villa, bro.
Okay.
We'll hang out, we'll go
Assalamu alaikum.
jump on a boat and that, yeah. Alaikum, bro.
Inshallah.
Go on, bro.
Inshallah.
Yes, guys, any other questions?
Assalamu alaikum, bro.
Wa alaikum salam, Abdurrahman. What's going on, man?
Now, my name's not Abdurrahman still. My little brother uses my phone in it. Must have changed it. And then just every time I change it, it unchanges. I don't know why it was wrong.
No way, bro. What's your name, bro?
But Ali, bro, Ali.
Ali, yeah? Yes, Ali.
We spoke on Snap once or twice. We spoke on Snap a couple of times. I don't know if you remember me, though.
The man of Ali's
You must have, yeah. Too many people.
Chat to me, bro. What's the question, bro?
Yeah, my question is basically, you know, news, like, you know, when news happens, yeah, I want to know, like, how does it affect your trading?
Sorry, say that again?
You know, when news happens,
yeah,
like when news occurs, like something happens, how does that affect your trading? And why should I not enter?
Because news events are very, very volatile. You don't enter news events. For example, if I was to give you the option to, where do you live? Where do you live in terms of country?
UK, England, Birmingham.
Birmingham. Say, for example, come to London.
Yeah.
And I was to give you the option to leave your house and meet me at 11 a.m. or to meet me at 5 p.m. What would you choose?
5 p.m.
That's the wrong answer. You're going to be stuck in traffic, bro.
Oh, that's true.
Yeah. Rush hour. It's crazy. You're going to be stuck in traffic. But if you met me at 11 a.m., you can meet me very quickly. The roads are empty. You can drive there, catch a train. It's not packed. Everyone's already in work, so the trains are empty. The roads are empty. It's smooth, okay? But if you meet me at 5 p.m. now, you might get to me at 8 p.m. or 7 p.m. So that's why we don't trade news. News is a time where there's a lot of traffic in the market. A lot of traffic in the market where moves happen very, very in a volatile fashion. You want to avoid these areas. Liquidity sweeps happen. You know, price spikes in both directions, takes out buyers, takes out sellers. This is why we avoid this completely, because news events is a retail trap. Okay, and it's an excuse for price to move. News pushes price to our POIs. It pushes price to our take profits, which is why I say if you're in the position already, you can hold the trade. But don't come on Friday morning and say, okay, cool, it's 11 a.m. NFP news is dropping at 1:30. I'm going to enter a trade at 11 p.m. and I'm going to hold it throughout the news event. It's not going to work. Why? London session to New York session crossover is going to happen. More liquidity will be built up. New York session open, boom, 1:30, NFP happens. Your stop loss gets hit, take profit gets hit, but you're not in the trade. Why? Because we wanted to trade a news event. That's why we don't trade, because every single retail trader, every average trader, every trader who thinks they're going to get rich quick overnight is trading this news event, trying to put £100 into an account and flip it to 3K. I was one of them. I used to wait. I used to say news. Haha, let's go. Thursday night, I'm ready. I'm marking up some crazy zone like that don't even exist. I'm thinking, yeah, I'm gonna enter from here. I'm putting in £100. I'm making 5 bags on the straight. Literally risking my whole account. No strategy, no profit, like no risk management, zero. Doesn't work. You're not going to get rich quick overnight. This only rewards the people who put in hard work and treat this as any other endeavor of their life. Work, school, gym, you know, your relationship. If you're in a marriage and you take that seriously, the same level of discipline that you use for things that you care about, if you use that here, you will succeed. If you're not, forget about it. If it's just a thing that you're trying, forget about it because you're not going to last long. I'll be completely honest with you. Yeah.
That answered my question still. Thank you.
My brother, thank you very much, man.
Take care.
Take care, bro. You too. Any other questions, guys?
Assalamu alaikum, Nasir.
Wa alaikum assalam. Who am I speaking to?
Bro, I swear I got a weird name on this Discord because I'm my little brother, but
yes, bro. What's going on? Yeah, bye, brother. How you
saying, bro? You good? Shabona, Maji. What you saying? You good?
What's going on? Yeah?
Yeah, how you been, man?
I'm good, my bro. How are you, man? Always a pleasure speaking to you, my guy.
Likewise, my bro. This is it, man. You know what it is, bro? I'm looking to get some buys on gold, yeah? But what I wanted to ask is, the reason why I'm looking to buy on gold is because I feel like there's a lot of imbalances and also an unmitigated candle at the top. Hence why I'm looking to partials from the imbalances and then see how the trade goes. But I'm not really sure about the unmitigated candle because my knowledge is a little bit low on that. So what would you think? What do you think I should do?
When did you join the Zoom call, bro?
Well, slightly a little, like about 10 minutes late.
So did you watch my analysis on gold?
Yeah. I looked at it still. I was looking at it.
It's a bit of an in-depth one, bro, and I answered it very, very in-depth in analysis. But just to recap, you have to paint scenarios: scenario A, scenario B, scenario C. Scenario A can be an imbalance. Scenario B can be a level of supply. Scenario C can be that zone that you drew out isn't valid and it taps into an imbalance or a zone that's higher than that.
Okay.
Distributes, changes character, leaves a new level of supply, and you sell from there.
All right, cool.
This is why you have to just be patient, wait for it to tap into a zone and see what it wants to do. You don't enter until it shows you its hands through distribution, change the character, last point of supply, enter.
All right, just one more quick question, if you don't mind. What's your opinion on like, I see a lot of potential from the 45-minute time frame. Like, I tend to see it's easier to analyze and execute a few trades from there. Or would you still recommend to always start from the 4-hour or monthly?
As an overall bias, for overall direction, always start with a high time frame, monthly, even 3 month, monthly, weekly, daily, 15-hour, etc., to build your story. But when it comes to entry, you can enter from whatever time frame you like, as long as it offers you the best possible stop loss, you're risking less than 1%, and your risk to reward is amazing.
May Allah reward you, bro. Jazakallah khair.
Nah, bro, appreciate it, man.
Thank you, bro.
Any other questions, guys? Did Biggie land? So should be here as well, isn't it?
Assalamu alaikum.
Wa alaikum assalam. What's going on?
Alhamdulillah, wallah, it's good. I just wanted to ask you, I'm newly in this course, so I just wanted your tips.
Yes, brother. Hello, who am I speaking to? Sorry, I can't see. It's gone. Mustafa, yes. Yes. How are you? Okay, yeah.
Alhamdulillah.
What's going on?
I just wanted tips from you. Like I'm going through the course right now.
Where are you from?
I'm from Sweden.
Hey, Göteborg, Örebro, Stockholm.
I'm from Gothenburg.
Göteborg, come on, man. Say it properly, man.
Göteborg, huh?
Okay, cool. Have you finished the course?
No, I'm going through it right now. I'm on the 9th course right now.
The 9th video, yeah. Okay. So the first step is to get in the club by finishing the course. That's the first step. But if you're the club, what should I do?
The Discord.
Give you, bro. No. You have to finish the course first. But one advice I'll give you, bro, number one, finish the course. Number two, finish the course again with more detailed notes. And when you're going through the course, have your charts there. So whenever you're speaking about something, you relay it onto, you know, what you're hearing, and you're looking at the charts and you're applying it. Number three, back test. You're not going to understand what this means if you haven't been through the course. I'm going to explain it in the later videos in the course. And then you forward test a lot. So you practice in the live markets on your demo account first before you move to a challenge account and you take an exam. Be very active in the Discord. The most successful traders that are funded are the ones that are most active in the Discord, that are asking questions. Utilize the 24-hour support chat that we have. Utilize Trading Talk. Utilize the support from the advanced students. Everyone's here to help each other, okay? So always message, be active, and yeah, go. Number one, go through the course. And number two, write down your goals. Write down your goals and what you want to achieve, and have a schedule. Have a schedule every single day on how much, what time you're going to watch the course. If you're working, after work, etc., what time you're going to backtest until you reach the goal of being a funded trader that's made a withdrawal and you put it into your own account, and now you're trading your own account. Does that make sense, bro?
Naam, inshallah.
Yes.
So first, going through the course. Second, going through it again.
Yep. Oh, it's cut out. Can you guys hear me, or is it him? No, it's not time. We got to upgrade the version, right? Man, Yarimi University, man. We have to be professional, man. The time don't run out on this Zoom, man.
Assalamu alaikum, bro. Hello, can you hear me, bro?
Yes. Who's that? Same guy?
Can you see me? Yeah. Nah.
Yeah.
You okay, bro?
You okay, yeah?
Yeah,
I'm
my
guy.
good, bro.
How you doing?
I had a question for you, bro. Yeah, can you just quickly go on the chat and I'm gonna ask you a question, bro, about
Yep.
I was gonna ask you, bro. So obviously, how do you know? Say you have a stop loss. How would you know how much you're losing, depending on stop loss?
Have you been through the course?
Yeah, bro. Yeah.
So have you come across a website called Pip Calculator?
Pip Calculator.
Yeah, I'm asking you, have you come across a website called Pip Calculator?
No.
So that means you haven't been through the course properly, bro.
No, I've been through the course, bro. I've been here since what's it called? June, like the first day you started the course. But I'm still confused on that, bro. Like
yeah,
how
what
you would
I don't understand is I literally say in the course how to calculate pips and what to use. So if you've been through the course, you should know what to use.
No, I mean I know how to calculate pips, but I mean in real money. So how would you know how much you're losing?
I'm trying to say to you, bro. I've spoken about Pip Calculator in the course, so I don't know how you missed that.
Yeah.
Yeah, but to show you again,
yeah.
All you do is you go here. Pip Calculator. Okay. Sorry. You go here. And for example, whatever currency you're trading.
Yeah.
They changed it, they've updated it. What's this new update? Pip Calculator. Oh, damn. So here, basically, your deposit currency, the currency pair that you're trading. I think you have to sign up for it now, but it should be free anyway. So you log in. So that's basically what it is. You go on fxtmpipcalculator.com. And there's also another way to calculate it. There's something on. There's more Pip Calculator. So you basically use a website, a Pip Calculator website. It can be any website. That's just the one that I use. I just find it the easiest. You use a Pip Calculator website, and you just put in the lot size, your stop loss, the pair you're trading, and it will show you how much you've got at stake. Basically, how much you're going to lose if it's a stop loss.
I don't know how I missed that, bro. It's crazy.
Yeah, if you rewatch that, it's there. Trust me. Maybe you was eating cereal, you looked away for a second.
Yeah, probably.
You get me?
Yeah.
Yeah. Right, guys, I gotta go pick up my friend from the airport now. So I appreciate you guys. Any more questions you got, just ask it in the Discord tab. And I'll be back with you guys the next week. And once I'm back, next week on Zoom call, and then once I'm back in London, I'm gonna have the live event straight away. Don't worry, Saleh and myself will inform you in advance when that will be. Okay. Hope you guys have an amazing day. I gotta go right now, and the Zoom call will be posted tomorrow. Take care.
Assalamu alaikum.
Wa alaikum salam.